Good morning. How's it going? It's half an hour before the market is going to open on Tuesday, August 20th. Now, we've got some bullish momentum in the market right now, and this market has been going up for quite some time. So that should give us pause, because at the very least, when we have this type of movement, we need a pullback before we can move higher. You can see if I exclude this one, well, actually, let's just start counting from this red bar. That's 1, 2, 3, 4, 5, 6, 7, 8 days in a row where we've just been going straight up. That's pretty rare in the markets. It doesn't happen very often. And I'm pretty sure it hasn't happened this entire year yet. So 1, 2, 3, no, so this is, here we go. 1, 2, 3, 4, 5, 6, 7, maybe 8. So it happened in November of 2023. So this is the first time this has happened this year. It's just super rare, and we need to at least go sideways or pull back. Now we have the perfect excuse to at least go sideways. We have Jackson Hole coming up at the end of this week, and I don't think institutions will be making any major decisions before Jackson Hole between now and yesterday. And actually, yesterday, you can see that that was very low volume. So I'm not 100% convinced that that was done by institutions. At least maybe it was algorithms, but not humans positioning themselves for the next move. So we just want to be a little bit cautious right here. We might start seeing a little bit of a pullback or a chop sideways, and we want to consider maybe looking for a short to balance out our portfolio. So we started to lean bullish. And now going into Jackson Hole, we want to at least balance that out because there is risk for sure to the downside if Powell doesn't say anything like, hey, we're going to cut rates or I'm considering cutting rates. So right now, at this point in time, the market really is pricing in and expecting and is so certain that we're going to have rate cuts in September. If there's anything that he says that doesn't support that, or at least they can't twist and interpret into supporting that, then we will start to get a pullback over here. So let's see how the markets are opening. Let's take a look at our futures. And we're very, very flat, completely unchanged on the S&P and less than 10 basis points on the NASDAQ and down like 1 basis point on the Dow. So very, very, very flat, very similar to yesterday, except slightly negatively biased instead of slightly positively biased. But really, we just call this completely flat. As we saw yesterday, that doesn't mean we won't go directional, but today it probably does mean we won't go directional just because that Jackson Hole is starting to come up. We also have the FOMC minutes coming up tomorrow. So most likely we're not going to get hugely directional. If anything, maybe a little bit of chop, pull back a tiny little bit. Let's see how, oh, we had some earnings come out yesterday and earlier this morning. So let's see how those are doing. The first one was Palo Alto Networks. We saw that in the post-market review. That's doing very well, popping up over here so far. 351 and a half, so eight out of, so about 4 or 5%. And then we've got Lowe's also reported. And pre-market, they're down just a little bit. Let's see. So they surprised on earnings and then surprised to downside on revenue. Okay, so revenue, so they're making less sales, but I guess whatever they're selling is more profitable. That's not great news. And then the other one was Medtronic. Medtronic up just a tiny bit in the pre-market. So they surprised on both. Okay, so this is not really going to push the markets one way or the other. If anything, we might get, excuse me, a little bit of a tech focus because Palo Alto Networks did very well. I think I saw a news flash about AMD getting upgraded as well. Yeah, pre-market, they're up not a huge amount, but they are up more than just flat. So those two together might give the QQQ a little bit of a boost. But really, we're just so far, everything we're seeing is a little bit of a chop sideways. If we look at our bonds, up a tiny bit, nothing huge. Let's take a look at our VIX. VIX elevated, just popped up just a tiny bit. So 15. So we're right at 15. So that'll be interesting to see if we float back up above 15. It is possible as we're chopping sideways and we get a little bit of uncertainty about what Powell might say, it could float upwards. But I don't expect it to spike unless Powell says something that is completely unexpected. If we look at the Fed Watch tool, we ended yesterday 77.5, 22.5 on the expectations for a rate cut in September. Let's just see if those numbers got revised a little bit, or this morning's trading action might have, yeah, it got right back down to 73.5. So I don't think, well, you guys already know my opinion. I don't have to comment much more. We will see if Powell says anything or the minutes give us any sort of insight and start to shift this balance. If we start shifting over this way, then that'll be bullish for anything that's interest rate sensitive. And if we start shifting to the possibility of a zero rate cut, this market is not going to like that at all, because this movement has been entirely based on, oh my gosh, we freaked out about the Japanese carry trade, but hey, we're still optimistic that the US is going to cut rates. But what's interesting is that it seems like what no one is thinking about so far is that a rate cut is also bad for the Japanese carry trade. So we'll see. We'll see what happens. At some point in time, that carry trade will come back into focus because those trades are not completely unwound, and the Bank of Japan is going to raise again at some point. So we'll see, but maybe not super soon, since this just happened maybe half a month ago. So we probably have another at least 2 to 3 weeks before the Japanese start to cut again, but or not cut, to raise their rates again. But once that happens, if that Japanese carry trade goes back into focus, then we could start seeing another kind of panic like we did this past a couple weeks ago. So what we want to recognize is that when this came down, we came to VWAP, and a bunch of institutions bought. That was the news. 1 billion purchased versus 14 billion sold by retail. So the institutions were confident that this was going to bounce, but it doesn't mean that it's going to bounce every single time. At some point, that panic could, or they could get squeezed so badly that we start to drop through. So, and I would be very, very careful. The other thing that I'm just now noticing is I've been talking about low volume, but what I did not notice was this. Straight up, straight down. You got divergence in your volume and your price, and price cannot keep going. This is the fuel. The volume is the fuel for price. So if your fuel keeps dropping, if the volume keeps on dropping, this is going to be short-lived. It's not going to keep on going. It will, at the very least, chop sideways. And again, we have the perfect reason to chop sideways with Jackson Hole coming up later in the week. So what that means for me is that I need to start preparing, because we leaned our portfolios bullish. We need to prepare for some volatility and maybe what the market will interpret as negative surprise in terms of not getting a rate cut or no longer expecting a rate cut in September. So right now, our job is to watch the market carefully, start to position some shorts into the portfolio to start neutralizing us again. And if we do continue moving upwards, again, what we said yesterday was the most likely path was a pullback at the very least to that MA50 or EMA8, which is basically the same level right now. And then we could continue to move upwards. And that was just really just be a baby pullback. let's just see if we could even call it a pullback. It might just be a mean reversion. 2.5%. Yeah, I would categorize that more as a mean reversion. We do need at the very least that, if not pulling back to this dotted red line here, which is a different time period VWAP. And so before we would resume a movement upwards. So maybe some chop sideways into September 18th to that rate cut decision if we really don't get any sort of clarity, or we could pull back a little bit further into that dotted red line or that MA90 or EMA 100, and then start resuming our movement upwards. But if any sort of negative news comes out, any sort of, hey, inflation is back, we're getting a ton of jobless claims, there's reason for the Fed to not take action, or we start to fear recession again, then we'll start dumping downwards once more. And that doesn't mean that we'll break these lows, but at the very least, we'll come back and test these same levels, and then we would have to see from there whether or not that would break. So far, I wouldn't be focused on that bearish case at all. Right now, the question is chop sideways for a couple of weeks or just a little bit. And is that chop sideways? How wide is that range? Is that basically pulling back to this cluster of support right here, or does it go down a little bit further? But in every scenario, our expectation is that we would have at least some downward movement before we move higher. And so it's appropriate to throw some shorts in there. So our job today will be starting to look for what are those weaker sectors, what are those weaker stocks, and then start to decide how we're going to position ourselves in terms of the shorts that we will use to balance out the portfolio. So that's not something that we can decide right now. We really want to see the market trade some before we start hunting for the best areas to look for those shorts. So we should know by this afternoon. But for now, we're just going to watch this session and see how everything plays out. Do we start to get some bearishness in this market, or do we stay sideways? Bullishness is unlikely, but I've been wrong. It could happen. This was quite strong. But really going into Jackson Hole, I don't think any institutional manager, at least anyone who wants to keep his job, is going to really start to get directional to the bullish side in the current market. So I'll just leave it there. We'll see how everything plays out today, and then we will start to figure out where to put in those balancing shorts this afternoon. Have a wonderful rest of your day, and I'll see you in the post-market session.